Good afternoon, everybody. I am Ilan Handelsman, National Sales Manager for Raintree Financial Solutions. And today we're going to be hearing from Lynx Equity. At the moment, I'm joined by Michael Denny. Hi, Michael, you're going to run through a presentation this morning, and then I believe some other members of your team are going to be joining for Q&A.
Yes.
So without further ado, I'm going to hand over to you, and let's get started with the presentation.
Okay, I'll share my screen so you can have a look at the presentation.
Fantastic. And for those of you attending, and we have a lot of attendees on this call today, very nice to see. Please, in the bottom of your screen, there is a Q&A box. Please type in any questions that you have in that Q&A box, and I will get to all the questions before this call is done. And don't be shy, just type them in. Thanks.
Okay, well, everyone, thank you very much for attending today's webinar. My name is Michael Denny. I'm the Managing Director of the Lynx Equity Income Trust, and I'm joined today, or I will be joined today, by Brad Nathan, our founder and Chief Executive Officer, as well as two members of management, Steve Grossfeld, who's our Chief of Operations, and Eric Percy, who is our VP of M&A. I have a short presentation I'm going to go through, but first of all, I go through the fine print. And our instructions are always let you know that you should read the offering memorandum. Your financial advisor has read the offering memorandum, but you should read it as well. The presentation that I'm making today contains forward-looking information, which may be incomplete or incorrect. There are risks associated with an investment in the Lynx Equity Income Trust. They're detailed in the offering memorandum. Please read them and discuss them with your financial advisor. And lastly, consider your redemption options. Lynx is recommended as a long-term buy and hold investment, and redemption is subject to certain conditions which are explained in the offering memorandum and briefly summarized below on this slide. So Lynx is one of Canada's largest corporations. We are 459 on the Financial Post 500 of the largest companies in Canada. We have approximately across the group $488 million in revenue, about $35 million in EBITDA, which is effectively pre-tax profit. Over the group, we have about 2,000 employees. We have built our business on $225 million in investor capital from about 900 individuals and 4 institutions, just like yourself. People always want to know what the punchline is before they listen to a presentation, so I like to put the returns right up front before we describe the company. But you can see 2 charts here on the left, and on the right is a list of what people are earning in 2020. We have a philosophy that the longer you're invested with us, the higher the income we should pay you. So you can see here on the chart where my cursor is that in 2020, people that had invested with us in 2016 were making $952 on their investment. People that invested in 2017 were making between $937 and $912. And new investors are brought in at a floor rate of 8.25. And on the other side, you can see that our chart illustrates what people have earned over time. And then when we do pay an increase in the rate, it does accumulate over time. So people from 2016 are now earning 3 increases from their original base rate. So I guess the 3 questions that you want us to answer for you today is, first of all, what does Lynx do? Secondly, is Lynx a good company? And then lastly, what is the Lynx Equity Income Trust offering investors such as yourself? So what do? Well, we buy small and medium-sized businesses from retiring owners. We've been doing it for 12 years. Actually, I should update that. It's 13 years now. We own approximately 50 businesses across North America. That's in Canada and the US, and in Europe, in Britain and in Denmark. We target on acquiring businesses with EBITDA from $750,000 to $2.5 million US dollars. And we follow a buy and hold strategy. We're a little different than other private equity funds in the sense that we buy a company and our complete intention is to hold that company for 20, 25, 30 years. We are not in the business of buying companies and then dressing them up and flipping them to another buyer. That's not our business model. We only buy quality businesses run by quality people. We buy established, low-risk, profitable businesses. We have no interest in turnarounds. We have no interest in any businesses as challenges. We only buy businesses that have good long-term industry fundamentals. They must have committed and experienced management. And when we buy a business from a retiring owner, the retiring owner must agree to stay on for 2, maybe 3 years to help us manage the transition from his management to the new president. We're industry agnostic, meaning that we'll buy businesses in almost any industry. However, we do not buy things that are resource related or commodity related. We don't buy technology, and we don't buy real estate. So why do owners sell to us? I mean, well, the obvious, answer is, we pay a fair price on fair terms, but that doesn't give you the full picture. The full picture is that we take care of the owner's employees. We aren't seeking to remake the company. We respect the owner's legacy with his customers, with his suppliers, and with the community. And because we're a buy and hold investor, we aren't going to flip the company to another buyer after trying to remake it. And we have a history of delivering on our promises. One of the advantages we have, having been in the business for 13 years now and bought, well, almost 50 companies, is that a retiring owner can call up 10 or 20 CEOs that have sold to us to say, hey, listen, does Lynx deliver on its promises? Are they a good buyer? Did they take care of my people? So the next question you want to know is, well, is Lynx a robust business? Well, I can talk about this subject for hours. I can talk about all the way from our diversification to the fact that we're in Canada, the US, Great Britain, and Denmark, that we have critical mass, we have a great reputation, we have multiple industries, 4 institutional investors. However, all of this really comes down to 2 issues. Do we have a robust business model? And do we have the committed and experienced team to execute that model? Now, I believe that the answer to those questions is a resounding yes. I often tell people that this is the most important slide in the presentation today. I tell people, listen, if you're going to remember one slide from our presentation, remember this one, because this is the foundation of our business. We buy businesses 4 times earnings, which represents a 25% return on our investment right out of the gate. And here's a quick numerical example. We sit down with a company that's making $1 million in profit. We are able to buy that business for 4 times profit, which would be $4 million. That means that we are earning on our investment 25%. And so we don't need to seek growth. We don't need to remake the business. We don't have to lay off employees or cut salaries or make any dramatic changes to the business that makes it riskier, because we're earning a good return right out of the gate because we bought the business at a good price. The implications for investors such as yourself is that we don't have to stretch to pay you an attractive return of 8, 9, or 10%. Our businesses don't have to chase growth. I mean, if we get growth, that's fantastic, but it's not necessary for us to succeed. I often ask people, I say, here's a pop quiz. Say we buy a business for $1 million that has $1 million in profit. And 25 years later, that business still has $1 million in profit. That business has had no growth, not even inflationary growth. It's still making $1 million a year 25 years from now. As a buyer, are we upset that there's been no growth in that business? Absolutely not, because we just earned 25% on our return every year on our investment every year for 25 years. That's the strength of our model. And then lastly, we use leverage, but it's not necessary to generate a superior return. And you can compare us, for example, to the real estate industry, where many situations in many markets, the cap rates on real estate are so low now that you really can't generate a superior return unless you're willing to lever that property aggressively. And then lastly, do we have the skilled team to execute our model? Well, we've got 30 people at head office. We've got 44 presidents and 2,000 employees in our operating businesses. And the neat thing about this chart of all our people in Toronto is that many of these people have been Brad's partner for years. I mean, here's Brad right here in the middle, no hair. But right below him is Joanna Lipfeld, who I think was the first employee at the group. And then Marvin here next to Joanna has been with Brad right from the get-go. Judith Benatar was one of the first investors, or perhaps the first investor in the company. She's now joined the company. Brad's father, Hartley, is involved. Brad's sister runs our investor relations group. Eric is head of M&A right here. I think Steve Grossfield's our operations head is here. Michelle is our head of H&R, which one of the most important functions we have as people. So we have depth to execute our business model. And that's depth that Brad's built over the last 12 years. So that's who we are. Now, the next question you want to have answered is, what is the Lynx Equity Income Trust offering investors? Well, what we've done is we've taken all the companies in the US. We have not included our Canadian companies. We've not included our European companies. We've just taken our US portfolio and we built the Lynx Equity Income Trust around that portfolio. That portfolio now consists of 13 companies in the US in businesses as diverse as flooring, grounds maintenance, women's clothing, kitchenwares, trucking, fasteners, jewelry. And these companies are based on the West Coast, and some of them are based in the Midwest, Michigan for Maverick, and we just bought a company in Nebraska. Now we're actively buying new businesses. COVID has slowed us down, but it hasn't stopped our growth. We just closed Midwest Floor Coverings in Lincoln, Nebraska. It's been our largest acquisition we've ever made. It has approximately $3 million in forward earnings. It now makes us one of the top 5 flooring contractors in the US. And we haven't chased this industry, it basically chased us. Once the word got out that we were a good buyer of companies, we've been approached with opportunistic acquisitions. The deals are coming to us. And then we've got another target we're working on. Perhaps my partners can speak to this, that we hope to close in May in New Jersey. There's no shortage of acquisition targets. That's of course why we're seeking your money. So the terms of the offering to you in the trust is that we pay a target yield of 8.25% out of the gate. There's possible yield upside in that every year in June, we look at the growth of the portfolio, and if the portfolio has had revenue growth, we pass some of that revenue growth on to our investors. And that increase, if it does occur, is cumulative on previous increases. The units are registered plan eligible. They're redeemable subject to certain conditions. And there's a $10,300 minimum investment. And then here's the slide I showed you earlier that shows our historical and current returns to investors. So with that, I'll turn it back over to Alan and open it up for questions.
Thanks very much, Michael. Brad, good to see you on the call.
Thank you. Sorry about the technical difficulties in the beginning.
No worries. I'm pleased we got it sorted out. Of all of you who are on this call listening in, please, this is a great time to type in your questions. I've got a good handful to get started, but I'd like more in the queue. So first of all, can you explain to us why the trust is only investing in the US companies that Lynx owns and not in the Canadian pool or the European?
Well, it started out in the beginning, we had a large amount of growth in the United States, and it was a clean security situation. So we were able to provide good security for this division to the investors, and the opportunities were borderline unlimited. So it started there and just continued to grow there. And that's where we saw the most amount of growth and hence larger returns for the investors there. But it is not limited to that. We can change that in the future. It's just that's where the opportunity lay in the beginning, and we continued along that road. Michael might be able to touch on that because I think we can change the offering memorandum to include Canada and Europe. And if that's a desired approach, we'll go there.
Yeah, we're always open to advice from our financial advisors and our investors, and certainly we do have growth in Canada and in the UK. When we launched the fund, I think there was often a view that many investors are overinvested in Canada and underinvested in the States. And the American economy is so deep, so broad, so strong that we also felt that we would be serving investors well if we offered a US focused product.
Yeah, in the private equity space, we often hear that you can get stronger revenue for the same dollars spent in the US compared to Canada. Is that your experience, Brad?
You know, what we see is that there was more growth in the US in these individual businesses than in Canada, but that's just particular to our space. We had real significant growth in a few of our businesses in the US, and we had not seen that in Canada. So I don't know if that exactly answers your question, but certainly the investors were part of that.
Okay, great. Thanks. How has COVID affected your business?
What's COVID? Sorry. You know, we obviously saw what the world saw, and year to date for 10 months this year for 8 months is 8 million in EBITDA versus 10 million last year. But after the loan forgiveness, we'll be closer to 14 million year to date. So we're ahead of last year by 40% if you include the government loan forgiveness. We've seen some slowdown in the flooring businesses. It's hard to say it was attributed to COVID, but we've also seen some increase in some other businesses. So across the board, we've seen mixed results. The retail has actually done better due to some operational improvements from Judith, who's gone into that individual business and turned it around. We've seen some decrease in businesses that were related to airports or gift stores in a wholesale jewelry business. And we've seen some stability. So we're very well diversified across the country. It's not necessarily location based. And there's one business that we have that has felt no impact at all. So it's really hard to say what is exactly COVID related, but we will end up doing better than last year once the PPP program sends us the forgiveness component.
Okay, great. Back focusing on the US, does the US exchange rate having changed in the past years, does this have an effect or an impact on the fund in any material way?
No.
I'll let Michael answer that in terms of returns, how that's impacted from dollars, because I believe it's just a percentage growth on US dollars. And I'll let Michael answer that if that's okay.
Thanks.
Yeah, we as a corporation are perfectly hedged because we have operations in Canada and the US. So if an investor invests with us in US dollars, we pay them back in US dollars. If they invest in Canadian dollars, we pay them back in Canadian dollars. In either case, their investment is in the US economy.
Okay, thank you. Why do you own so many flooring companies, Brad?
We got into one deal that was just, I can answer the specific question first, and then I'll get into a broader answer if that's okay.
Yeah, please.
Deal came along that we liked the seller, and it was doing approximately $1 million and a bit in EBITDA. And then 2 years later, or 3 years later, it was doing $3.5, $4 million in EBITDA. And we just rode the Portland expansion quite well. Portland was exploding, and the business was in the flooring space for construction, and it did very well. And then along came another opportunity where the potential seller knew the seller of the floor solutions in Portland, and he was in Seattle and had companies like Microsoft and Amazon, got a good reference from us, and we bought that business. And obviously Amazon has done how it's done, and we've ridden that wave quite well. Same with Microsoft. And then along came another one who knew of him. And once we start in an industry, it's great when you get calls for another business in that space. And we have now we have enough that we have mass where we're able to get better buying discounts. And we have a president at the helm who's oversees the entire flooring portfolio. We have a controller/CFO who oversees the accounting and finance side. And it's just a really good word of mouth. It's not so much that we're knocking on doors of companies that might be for sale that are flooring businesses. We get those calls. It's very different when someone is for sale versus when you call them to see if they're for sale. We are not in the roll-up business per se, but we do understand the industry, and it makes our due diligence much, much easier. And the broader answer is that these businesses are very similar. All these businesses, every single business is similar. They all have a president, financial statements with income and EBITDA and a balance sheet. And at the end of the day, what we really look for is just a very good guy who's able to run this business, or woman, excuse me. And it's important for us to be able to find that the rest of it follows through very well if you have a great person at the top. And if you have a jerk at the top, you have a jerk at the bottom, because who works for the jerk, right? So that became our fundamental rule, is just making sure we find a good person. What industry we're in doesn't have the same importance as people might think. In our space, really, it comes down to the person running it. Eric Percy, who is head of acquisitions for North America, has extensive experience in U.S. acquisitions. And if he has anything to add, perhaps he could be unmuted and talk a bit about the experience he has with regard to the flooring space, if that is of any interest.
Sure. Yep, that would be great. Andrea, could you unmute Eric? Hi, Eric.
Hi. Yeah, I think Brad touched upon most of the origin story. And I will say now, I mean, we've been able to really capitalize on some synergies in having these other companies already in our portfolio. For example, that first company that we acquired in Seattle, well, we've now merged them with the company that we acquired also in Washington State, but Eastern Washington. And so now that is one bigger and better organization after, we acquired 2 companies, and the same thing in Portland. This past year when we acquired De Benedetto's Flooring, that company has now merged with Floor Solutions, who was the very first flooring deal. And so by having companies in similar industries and being in a similar geography, of course, helps. But we're able to really capitalize on some really low-hanging fruit by having multiple businesses in one industry.
Great. So it seems like there is a mini roll-up play going on, at least in the flooring industry within that portfolio by chance.
Yeah, and it's really what the companies want to do. We don't force these companies to merge. We don't force them to even work together. I mean, of course, it's encouraged, but just by inviting them to all talk on a regular basis, flying everyone out to a centralized location for a few days of meetings to talk about best practices, what they're seeing in their neck of the woods, new products that they're happy to be using in the present moment. Just by facilitating those conversations, they have come to the realization of, hey, you know what? We do have some redundancies here between the 2 businesses. It would be good if you serviced our customers in this area and we service your customers in those areas. So it's been very natural. So it's been great to see, but it's really just from facilitating the conversations and then making the decisions themselves.
Great. Thanks very much, Eric.
Thanks, Eric.
Michael, do you want to answer the typed in question there?
I just got a question.
Go ahead.
We pay quarterly and there's no lockup period and you can redeem at any time. However, if you redeem early, there is a redemption fee that's related to the commission that you paid your financial advisor.
And that redemption period runs for the first 5 years and then dissipates?
5 years or 3 years, depending on the commission you paid your financial advisor.
Got it. Okay. What steps do you take to make sure you're buying a good company? Brad?
I'm going to turn that one over to Eric again. And our kind of favorite tagline has been take the seller out for dinner and see how he or she treats the waiter. We want to see how these people are to other people. We really can't emphasize it enough that we're in the people business more than we are in any individual industry. However, having said that, we do extensive due diligence, and I'll turn it over to the expert, Eric, on that again, if that's okay.
Sure. Thank you.
Yeah, the dinners are great. We definitely learn a lot. We get to see the seller's character, but oftentimes they'll bring key people to the organization to those dinners as well. So we kind of look under the hood there too. But yeah, we do conduct hours upon hours of due diligence. We start the due diligence period with a 1 to 2 day, full day session of question and answer period where we ask as many questions as possible, lots of hard questions that sometimes feels a little silly to be asking someone that you've been speaking with for potentially 1, 2, 3 months before negotiating the deal. Like, are you part of any collusion? Are you or any of the employees involved in any illegal activity? We just ask all the questions on top of all the ones about customers and suppliers and their real estate, et cetera, et cetera. But we start from there, and then we have at least 250 item document request list that they work through and provide us all the items in that we then analyze. We do customer surveys, meetings with other key personnel, of course, all the legal searches and the accounting due diligence for the quality of earnings. So it's a very extensive process that, of course, starts with the dinner to make sure that these people are people who you can have a dinner with. If it's not a very enjoyable dinner, then at least you're going to save some money by killing the deal from there. But after that, it's a very extensive process.
Great. That was very instructive. Thank you. Michael, this one's for you. How are the distributions treated for tax purposes?
Yeah, the distributions are 100% income, just like interest income.
Great. And just to reiterate, this investment is TFSA and registered plan RSP eligible, so that you can shield yourself from that interest income. How do you ensure that the businesses you buy continue to perform and do not decline in profitability?
Not that I can't answer these questions, but I will again pass this over to someone else, Steve Grossfield, who's our COO. But before doing that, we do have monthly budgets, and I know Steve will go over that. We do spend time. We have allocated individuals from our operations group, and there's an entire group who are focused on certain businesses. And it's almost equivalent to like a bank account manager at a bank who has a certain number of clients. We do that as well with a lot more extensive work. And on that note, I will pass it to Steve because he'll be able to give you some specifics as to what he does.
Brad, I think, Brad, that high level overview really sort of summed it up. I'm not sure how much detail to go in other than to say that we work very closely with each of the teams. All of the presidents effectively report into me, and we have an operations management team as well that is comprised of 5 individuals plus Eric's assistants as well. And we work very diligently with those presidents to not only annually structure a budget, a strategic plan. We work with them on a monthly basis, reviewing their budget and talking about their variances and always asking about some of the human resources issues or industry changes. And it's sort of a mixed bag. It depends on the situation, depends on the company, depends on the location. We develop appropriate strategies to move forward.
So what I'm hearing is that upfront you do strategic planning work, goal setting, budgeting, and then you're in touch with senior management on a monthly basis?
At the very least, a monthly basis, that's correct.
And if something doesn't pan out in the way that we expect and the budgets aren't being hit, we'll send in someone to be there basically on a daily basis, like Judith has had to do.
Can you give me an example?
Yeah, I could pass it over to Judith as well, but one example was Kitchen Caboodle, and if Judith feels like speaking up, she can if she's able to, but Kitchen Caboodle was struggling. It was a retailer in Portland, and Amazon hit it quite hard. The minimum wage went up quite a bit in Portland, and real estate prices went up. So after 2 years of losses, we sent her in, and she's turned it around to be profitable. And she went in and basically was there all day long, tweaking every single thing, and turned it around from a loss to a profit, and just done a fantastic job there. And that's the only one in the United States that's required that. And the market really did change. It wasn't so much about the specifics of the management as much as it was the actual industry shifts. And it's death by 1,000 cuts, and it's also improvement by 1,000 cuts. So, or 1,000 improvements. And that's what she did. Little things all added up.
Great. Judith, do you want to comment on that experience for us?
Can you see me? Because I can't see myself. So
No, I don't think
Can
they
you
have
hear
We
me?
can't. We can hear you though.
okay. Well, obviously retail is super challenging, especially in COVID. So we have 5 locations, like four locations and a warehouse location. So the biggest expenses are the leases and the payroll. So I went and renegotiated all the leases with every landlord. And for the first time in my lifetime, tenants have more power than landlords because they're desperate to keep their tenants and people are dropping like flies. So in Portland, Kitchen Caboodle's been around for over 40 years, which is just a testament to the whole Lynx strategy of buying established companies. So it's actually it's the go-to place for kitchen, but we also had a major national competitor in Portland called Sur La Table, which actually went out of business in Portland. So I feel like the team at Kitchen Caboodle is superb in the fact that they've actually survived while other companies, such as our biggest competitor, has gone out of business in Portland, which is a major national chain, right? So we just renegotiated all the leases and then had to start really tightening up the payroll by just consolidating jobs. And then there's inventory. I mean, retail is, even before COVID, we had to compete with Amazon, which is hugely challenging in and of itself. But anyway, we're turning it around and it's a phenomenal team. And I'm very optimistic about it. So it's a good story.
Fantastic.
Is that enough on that?
Yeah. It really adds a lot of color and texture to hear from all the individuals on the team who are rolling up their sleeves and getting into the businesses. It's very instructive.
It also helps, like from all the way down to renegotiating the printing leases, which were $25,000 or $35,000 a year, down to $5,000 or $10,000 a year. And I believe we have someone on the call. I won't mention who, but one of our investors who has extensive background in investing and operations and accounting, and she told me that and she has a family business, and one of the things that she was able to do was when they do an acquisition, they were able to send their kind of trusted people into that company to run it. We don't have that luxury because we do so many smaller acquisitions as opposed to much larger acquisitions where there are a few of them and they have the network. We have to make sure that these people, as I said, are good people. We're in the transition business, the succession business, more than we are any individual business. And so that comment didn't get lost on me, that you're able to send in these trusted people. We have to make these people trusted people who are running it. We have to make sure that's our homework. And a safety check is to make sure that the people who are checking on them are on top of everything. So it's a very hands-on business, what we do. We are somewhere between inactive CEOs and very active chairmen. And I think at the end of the day, having someone you can send in is incredible. If you could have someone to become a president, we won't have that, as I said, because we do so many, but we do have a great list of testing in order to be able to see if the person we're hiring is the right person. Cindy Nathan, in addition to being my sister and head of investor relations, also does our high-level hiring for HR. And it's a tough gig. We have to make sure we pick the right person to go in there. And you have to get rid of the person as soon as possible if they're not the right person. Hire slowly and fire quickly. And that ties into doing acquisitions. When we're doing an acquisition, it's not as simple as multiplying by 4, even though the math is right. We have to make sure that the person that we're buying the business from has a very solid transition plan with us. One of the first 3 questions is, how long are you going to be staying after we buy the business? And if he says, I only want to be there for 6 months, we're moving on to the next opportunity. And thankfully we get, 2,000 opportunities a year.
Great. Can you tell me about a time when that trust broke down between you and one of your partners, and what happened there?
So one of the people running the businesses, or one of the
people running the businesses?
I think in one recent case, our flooring business, the president was still there, brought someone on. It was GW Flooring, brought someone on to be president. He thought he was perfect. We interviewed him. He flew to Toronto. Everyone met him. We thought he was the right guy. He said all the right things. And then very shortly after, he had a little bit of a kind of like a closed door policy and a blackboard approach, and trying to cut commissions to sales staff, which is basically, you might as well just close the door. And within 3 months, the president said, we made the wrong move. We have to find someone new. And so it was very good that we were able to have that president still there to see if he was the right guy for transition. In another case, we found someone stealing some cash and he was gone immediately. Now, the beauty of the United States is that the HR laws are much easier than Canada. If California is the 50th best place to do business, Canada is the 51st. And so that is a focus of ours. From a tax perspective, it's better. And also and I won't bore you with why unless someone wants to know, but from an HR perspective, in Canada, we had to let go of a bad president and we had to pay 2 years severance. At the same time that the going down, we pay severance and have to let go of the president. I mean, whoever wrote the HR laws in Canada never ran a business.
Okay, thanks for that, Brad. Brad, what's the vision? How many businesses do you want to own? Where are you taking Lynx Equity?
Well, it's really an unlimited number of businesses that we can own. We have a tried and true approach. We have the entire infrastructure set up that's taken 12 years to set up. We're just getting going. It's all about capital. As we get more businesses, we hire more operation managers. We're hiring hopefully a new acquisitions person. And we have our formula, and our formula works. We don't want to win every deal we look at. It means we're overpaying. We might have a 10 and 2,000 hit rate, which is good. We don't need to win 2,000, but our infrastructure is such that it's plug and play right now. So for every $1 million that we can raise, we can acquire with our terms $500,000 in EBITDA and pay the balance over time. If we raise 2 million, we can acquire 1 million. If we raise 10 million, we can acquire 5 million worth. The key is not to have too big of any business in our portfolio. And we keep doing lots of smaller deals to diversify and never be reliant on one business.
Okay, great. Great. Jane, I hope that answered your question. Brad, what is one thing that keeps you up at night?
Usually a good Netflix series, but it's changed. What used to keep me up at night was worrying if we'd have enough money to make payroll. Now it's worrying if we have enough capital to continue to grow. The worries are we're so well diversified. We are not reliant on any one business. I went through hell to get to this point, and I can tell you those stories if you want, but that's probably an entire Zoom meeting on its own. But the worries that I used to have, we don't have anymore. We just closed a $50 million Canadian banking line with Washington Federal in the United States. Back in the day, we had a $50,000 line called on us, and I was running around trying to get an increase in my credit card. So, and I was living in my office because I had rented my condo out to be able to survive and put the money in the business. I rented it out for 18 months in advance and took the money, put it in the business, and moved into my office just so we had enough money to survive. So I've been there. We don't have those problems anymore. We are getting calls for capital, and we're getting calls from the banks. We are getting an unlimited amount of deal flow, and we have the most incredible team that I could ever hope for, from someone running Europe for us, Western Europe, someone running Denmark, Eric running acquisitions in the US, a fantastic operations team, incredible HR, incredible operations, and incredible finance. And Michael's been an incredible addition from this side of the capital raising. And Joanna's been my partner since day one, and nothing but absolute pleasure and pure trust. And we both go home worried, but well, now we both stay at home worried, but it's for real growth as opposed to the issues that we used to face, which was potential death for 8 years straight.
Right. Great. This is going to be last call for questions. Please type your questions in if you have any. So this is going to be I'll read the question. It's going to be a difficult question to answer, but what amount do you see to the increase? What amount do you see the increase of the value of the trust units?
Well, I was told there was going to be math today. Sorry, Michael, take it.
Yeah, we're a little different than a traditional REIT, where their return is from the distributions plus the accretion of the value of the units. In our case, we push all the return to investors via the distribution, not via an increase in the net asset value of the units. And the return you earned was 100% driven by the distribution we pay every quarter.
Great, thank you. That's helpful, Michael. Who is distributing your offering for you other than Raintree?
We're currently working with Portfolio Strategies, Pinnacle, Rethink and Diversify, and a couple of other exempt market dealers.
So you've got broad distribution.
Yeah, we'd obviously like broader distribution, but we have who we believe are the top EMDs in Canada distributing our units. We haven't reached down to the smaller firms that don't have quite the quality control that Raintree has. Raintree's philosophy, Pinnacle's philosophy, is very consistent with our philosophy of dealing with quality people and quality investors.
Absolutely. And we at Raintree, we like when an issuer has multiple channels for raising capital. We don't want to ideally be the only channel through which an issuer is raising capital. The more capital you raise, Michael and Brad, the more successful you're going to be. And if we can work as an investment industry to raise capital for you, all the better for Raintree's clients. So it's a win-win. That's great. Thank you very much. Any final comments from either of you?
No, we're just appreciative of the support, and we're looking forward to the future. And thank you very much. And thank you to our team for
thank you for making time for us today and listening to our presentation.
Of course. Gentlemen, thanks. Eric, Judith, Steve, I appreciate all of you contributing today. Take good care, everyone.
Thank you.